There is a way to buy Bitcoin at a discounted price, and as of today, this discount is about 50% of the original price of Bitcoin. And if you want to know how to do it, then please keep watching this video, because this is exactly what we are going to talk about. Hello guys, and welcome back to my channel. My name is Anastasia, and on this channel I talk about investing. Today I want to tell you about a fund which is called a Grayscale Bitcoin Trust, which consists only of Bitcoins and which at the moment is trading for less than the actual price of Bitcoin. So how is that possible, and what risks are associated with this investment? Let's take a closer look at it. Grayscale Bitcoin Trust is a fund that allows people to profit from the change in the Bitcoin price without investing directly into Bitcoin. It's quite a complicated idea, but for now we don't really need to know exactly how it works. You just have to understand three things about this fund. So at the start, Grayscale invited a bunch of rich investors, pledged their money, and then with this huge sum of money that they managed to accumulate, they bought a lot of Bitcoin. Then Grayscale listed this fund on the public stock exchanges, meaning that now anyone could start trading shares in it. And the shares in this fund are supposed to track the price of Bitcoin, but only roughly. And this is why. When retail investors start buying shares of GBTC, which is the abbreviation of this fund, the fund doesn't invest this money into Bitcoin straight away. So for example, if I decide to buy $100 worth of shares of GBTC, this doesn't mean that GBTC at the same moment will invest this $100 into Bitcoin. The same happens in the opposite situation. If I decide to sell $100 worth of GBTC, GBTC will not straight away sell $100 worth of Bitcoin that it holds. Therefore, because of the price fluctuation in Bitcoin, sometimes the shares of GBTC cost more or less than the actual price of Bitcoin. And right now we are in the situation where the shares of GBTC are sold at a price which is nearly 50% less than the actual price of Bitcoin. Historically, the shares of the GBTC fund were sold at a premium, meaning that people were paying more money for these shares than the price of all the Bitcoins that were accumulated in this fund. This situation is usual for the bull market, which we've experienced in the last 2 years, and it's very beneficial for the GBTC fund itself and the institutional investors that were invited into this fund on the first place before it listed at the stock exchange. But during the bear market, the situation changes and becomes the opposite. When a lot of investors, especially big investors, start selling the shares, it is possible that the price of the shares becomes less than the price of all the Bitcoins that are accumulated in this fund. And because of the recent collapse of FTX platform, a lot of big investors sold a lot of their GBTC shares, which created the situation that we are in right now. Now, your next question might be, is this fund even safe? Well, it is safe, and Cathie Wood, which is a very famous investor who has a huge fund that invests into highly risky tech companies, has recently invested $5.4 million into this fund. So she bought 588,586 shares of GBTC. If you want to know more about Cathie Wood investments, I will attach the link to the video on my channel in the description box below this video. But of course, just because some big fund invests into GBTC, it doesn't mean that the GBTC is a safe investment. But actually, among all the ETFs that invest into Bitcoin, GBTC is the biggest, and it currently holds 643,572 Bitcoins. If you take a look at the second largest ETF, it holds only 48,466 Bitcoin. Even the Chinese government holds only 194,000 Bitcoin. So you can imagine that the amount of Bitcoins that is held in GBTC fund is huge, which means that a lot of people trust this fund. In the world of cryptocurrencies, we've seen many times how the biggest exchange platforms go bust in a matter of several days, so I cannot promise that this particular fund will be okay. Do your own due diligence, and remember that none of the information that I mentioned in this video is a financial advice, and it's just me sharing the information that I've learned. So If right now it seems pretty obvious to you that you can just buy a Bitcoin at a discounted price and profit from it when the price goes up, it's not that simple. In December 2020, when we were in the middle of the bull market, the shares of GBTC were selling at 40% premium, meaning that the cost of the shares was 40% more than the price of the Bitcoins that was held by this fund. People were happy to overpay because they thought that the bull market will never end. But eventually they ended, and now when we are in the bear market, the situation has changed completely and became polar opposite. People who invested into GBTC at the peak and overpaid for its shares by 40% have lost on the profits, and they would make much more money if they invested into Bitcoin itself. But now we are at the moment when the retail investors might be able to profit from this situation. The only problem is it's much riskier to buy a fund than buying Bitcoin itself. And here is why. If the situation keeps on going on and more investors exit the fund and sell their shares, the fund will face huge financial problems. And just like with FTX and other big exchange platforms that went bankrupt already, there is no one here to say that the same situation will not happen with GBTC, where the price of the shares will never correlate with the price of Bitcoin. And in a worst case scenario, you might lose all of your money. The reason of why this hasn't happened yet, or at least it hasn't been publicly announced to be a problem, is because for the fund and for its original investors, it's still okay to trade their shares at a discounted price, because there is also a management fee that is taken from everybody who joins this fund. So now let's look at advantages and disadvantages of investing into a Grayscale Bitcoin trust over investing into Bitcoin itself. At first, when I found out about this fund, I thought, what's the point of buying the shares of a fund when it's so easy to buy Bitcoin? But it's not the same for everybody. There are a lot of people, more traditional investors, who like the idea of investing into a cryptocurrency and profiting from the price, but the whole tech story is not really about them. So they prefer to invest through an original broker rather than creating their own account on Coinbase or Binance and learning about all the terminology and all the other things that you need to know before you buy your own Bitcoin. Secondly, if you bought your own Bitcoin, then you have to think about the keys that you have to store somewhere safe. You might want to buy a cold wallet, but for a person who is new to a crypto world, all this might be too complicated and people just can't be bothered with thinking about it. So instead what they do is they invest into a fund that takes all the responsibility for storing their Bitcoins in a safe place, and all the security questions are already solved. The third reason is taxes. Paying your tax from your crypto investments is quite new and people don't know how to do it, and the majority of people don't even want to know how to do it. And of course there are a lot of people who don't care about holding their own Bitcoin, they just want to profit from the price fluctuations. And on top of that, I'm pretty sure there is a huge part of investors who don't understand the difference between investing into Bitcoin and investing into Grayscale Bitcoin Trust. So as you understand, there are some advantages of investing into a fund, but there are also a lot of disadvantages. The main disadvantage is that you have to pay a 2% fee, management fee, if you decide to invest into a fund. The second disadvantage is if you invest into the GBTC fund, then you potentially might lose on some profits and you might overpay, like what was going on during the bull market. And even though this is not the case right now, we still have to mention it because you have to understand, depending on the time when you are watching this video, the situation might flip again and the information that I give you now will become completely irrelevant. So the third disadvantage is the risk, because if the price of GBTC continues to fall, eventually this fund will face financial problems one way or the other. So how to understand whether you are overpaying for the shares or you are getting them at a very good price? Well, originally the idea was that one share of GBTC is worth 0.001 Bitcoin. In other words, one Bitcoin is 1,000 shares of GBTC. And right now, one share of GBTC costs $7.5. So it is the equivalent of buying one Bitcoin for $7,500. When if you check the price of Bitcoin, it's about $16,000 right now, which creates a huge gap and is basically like buying a normal Bitcoin with a 50% discount. Now it's up to you whether you are prepared to take on such risk or not, and if you think that investing into a fund is a better idea right now than investing into Bitcoin itself. Thank you very much guys for watching me today, and let me know what you think in the comments below this video. Bye bye, and I hope to see you soon in my next videos.